Here's the host of Good as Gold, Nick Grovich.
Hi, Nick Grovich, back with you again. The bullion markets are staging a little comeback lately. You know, this is really typical, and it's one reason I probably disclaim everything I say about precious metals when I get these gut feelings are going up or down. Nobody knows. Just a couple of weeks ago, gold dropped below $1,200. We got down to $1,140. And of course, everybody turned negative. Of course, everybody turns negative after the drops occurred, not before the drop occurs. And, if you talk to 20 different so-called experts, I mean, if they're being honest with you, not just trying to sell you something, they would all tell you that it was a given that gold's going to $1,000, silver's going to $12, the market's dead, it's done. And just about the time everybody agrees that it's over, gold stages a comeback. It goes back to $1,200. Today we're up to about $1,210, give or take. And everybody starts scratching their head all over again and wondering what's going on. I mentioned before a gentleman that I have no financial reason to tell you this. It's just somebody I watch online. His name's Clive Maund, M-A-U-N-D. And the reason I'm mentioning this, you can subscribe to him. He does a lot of charting and explains a lot of things from a technical viewpoint. And I find it's really good to look at the technical viewpoint once in a while, because most of my clients are so consumed with the government and conspiracies and manipulation and the fundamentals that they don't look at the technical side. And usually if you look at both sides, you get a little better feeling for what's really going on. So Clive Maund, it's clivemaund.com. He does a lot of charting. I will tell you, sometimes it's very frustrating that, one day he'll be saying, oh, the chart shows this, and we're going to $1,000. And next day he says, oh, well, now we broke through resistance and we're back over $1,200, so now the market could take off. So even from the technical standpoint, the charts only tell you what's going on after it happens. So it's really hard. It's just really hard. The girls at the office bought me a crystal ball a couple of weeks ago for my birthday, and I have it sitting here in front of me, but it's I don't know if it's not working well today or what's going on, but it's not telling me what gold's going to do tomorrow. So I'm going to keep it here, and if something comes up and it tells me something that you can all get rich with, I will pass that on to you. But the interesting thing with the gold in particular is just about everybody I know was ready to give up on gold. And all of a sudden, we get back up over $1,200. Now, understand, I'm not trying to turn everybody into technical geniuses, or it's just worth understanding the basics. The basics when you're charting, it doesn't matter if it's metals or stocks or what commodity it is, but there's certain price levels that are support or resistance. So in other words, when gold was going up, when it passed $1,200, it tested that level a few times and then went up from there on the way up to $1,900. So that $1,200 was a support. In other words, that was a price level that gold tested several times. It was a critical level that it would not go back below, so that becomes a support. Now, once gold fell below that and went down into the 1100s, actually, down to about 1140, according to the chartist, then it's broken that support level. Now that $1,200 is resistance. In other words, gold going back up that's a resistance level now, because that's an upper limit that gold was not able to hold, and now it becomes resistance on the way up. So if gold goes back through the 1,200 and can establish itself above that, that's a real positive sign for gold, and that's what's happened. Now, of course, we don't know. Maybe gold runs up another $100, comes back and goes right back below $1,200, and everybody changes horses again and says, oh, well, now we're in a bear market. So, there's 100 different ways to read the charts. The reason I mentioned this Clive Maund is he does such a great job. He did a 21-page report yesterday, and the nice thing about him is you can go on his website, and after something's a day or two old, he'll let you look at it for free. So this is a really interesting update. But like I said, a couple of weeks ago, he was saying that gold was dead and it's going to $1,000. Now like I said, as of yesterday, he's showing all the different charts and showing bullish engulfing patterns and bullish flags. And I mean, you probably won't know what all that is, but if you read his little write-up here, it'll give you kind of a feeling for what the chartists look at. They look at the volume. In other words, if gold goes up and it's a low volume day, that happens a lot around holidays, like around Thanksgiving, very few people are trading. So those that are trading can have a big effect on the market. So it'd be a low volume, but you can get big price fluctuations, and generally, the markets discount that. So I don't know if a lot of that makes sense. The Swiss had their vote last week also. I mentioned this a few weeks ago. The Swiss were voting on whether they should increase their gold holdings. That's a simplified version of what they were voting on. And there was a lot of excitement. I don't know why people are saying the market moved because of that, because nobody thought that had a chance in heck of going through, and it didn't. It was defeated by 3-4 margin. But if that had gone up, they were saying that Switzerland would have needed to buy something like 1,500 tons of gold, which would have had a nice effect on the market. But like I said, it didn't go through. Instead, what they're doing is they're going to do the same thing we do. They're going to be buying more euros and more paper, and it's the same old story no matter which country's doing it. Now, interestingly, last week on Sunday night before I went to bed, I was watching the Asian market. And in Asia, let me back up. What happened was that the Japanese debt was downgraded. That happened in the U.S. A couple of years ago. They downgraded U.S. debt, and the gold went up, the dollar went down. Well, they did the same thing with the Japanese money. And in the Asian market, gold was down $40. And that made a lot of sense to me, because the thinking is if they're going to downgrade the Japanese debt, that means the yen goes down, the dollar goes up, and generally gold goes down when the dollar goes up. So when I looked at it Sunday night and saw gold down $30 to $40, I thought, well, that's going to follow through. Then the market opened in the United States, and when I woke up Monday morning, gold was up $35. So we had a $70, $80 turnaround overnight. Now, the bad thing was at midnight on Sunday night, there was nobody I could call to lock gold in at $1,140 an ounce, so it really didn't do me any good. And by the time the U.S. market opened, or dealers opened up that I could lock coins in with or gold in with, it was up $30. So we went we had almost a $100 swing in price from Sunday night to Monday morning. And the crazy thing about it is the reason that gold was up, the reason being given was the exact same reason that Asia had for it going down, that the Japanese debt was downgraded by Moody's.
Once again, here's Nick Grovich.
Nick Grovich back with you. I was talking about gold moving nearly $100 difference between the high and low Sunday night and Monday morning. And what's interesting about it, as I was mentioning before the break, is when you read the news, you can go on different sites and they'll tell you news of what's supposedly affecting the gold, silver, platinum markets. And I found it really interesting that in Asia, the lowering of Japan's credit rating made gold go down $40. And then when it opened here in the United States, the same reason, the lowered credit rating, was what was being given as a reason for gold to be up at that point about $70 from the low. So I've said this before, a lot of it is just psychology. It's a matter of how people decide to interpret the news. And sometimes, to be honest with you, I think they just try and fit the news to the move in the market. If the market would have gone down, farther, if the Asian downturn would have continued or at least held Monday morning in the U.S. market, I'm sure that the news would have been that because Japan's credit rating was lowered, that's why gold went down. So I think they would have used the same news to justify what gold did, no matter whether it went up or down. And that's exactly what they did, all within 12 hours of the move. They used the exact same news to justify what gold did. So sometimes I think they just don't know and they have to scramble to find some reason. Interesting too, I've talked to a lot of clients about silver, and for years and years, probably for the last 15 or 20 years, there have been a lot of reports about how scarce silver was, how we had these huge shortages of silver. And I know I've talked about this before on the radio and with my clients and through emails. But, there's some reports that are put out. Some of them are sponsored by coin dealers who want to sell silver, of course. And they claim that we've had these huge, huge silver shortages year after year after year after year. And I always, just common sense tells me, how can you have a shortage for 15 years? Now, I guess if it was gold, you could do that because most of the gold traded, if you have a slip of paper that says you own 1,000 ounces of gold, it's just as good as having the gold because unless you're a jeweler, you're not doing anything with it. You're just sticking it in your safe. But when you talk about silver, platinum, palladium, some of the industrial metals, it doesn't work the same way because they're actually using the silver. They're actually using the platinum. So having a piece of paper that says you own, 10,000 ounces of silver doesn't do you any good when you need to use the silver to manufacture something or use the platinum to make catalytic converters. You have to somehow come up with the physical metal. So when I look at it and I think, well, okay, silver's been, from $5 all the way up to 40-some dollars an ounce. Somehow, for the last 15 years, those huge shortages were filled. So if the numbers used in these reports were right, where did all this silver come from? Well, what a lot of them don't count is they don't count how much silver is already above ground. So a lot of the reports, when they're telling you how rare silver is, they're not counting how much silver the governments have already used to make coinage. They're not counting silverware, tea sets, all that crazy stuff that people don't really think much about. But that's where all those shortages of silver, that's where they were made up. They were made up from all this physical silver that's floating around. So when they use the reports and they're looking at silver in certified warehouses, they're looking at only a small part of the silver supply. So why am I talking about that? Because for so many years, I hear people call and they say, so-and-so, I read his report and this dealer says that, and silver's at $15 and it's going to go to 100, or they talk about the ratio, the gold-silver ratio is favoring silver. And to a degree, that's right. So when you see silver and gold go up dramatically, like you saw just a few years ago and back in 1980, silver does tend to go up faster than gold. But the thing you have to remember is when it goes down faster too. So if you bought gold at the peak, you're down roughly 35% from the high. But if you bought silver, you lost 2/3 of your money. So you have to keep that in mind when you're buying something. And it's true just about any investment. The higher the potential for profit, the higher the potential for loss. So a lot of people are sitting on silver. We're at under $17 silver today, and a lot of people bought it at $35, $40, $45 an ounce. So they're down tremendously on it, and they're scratching their head. They're blaming manipulation. They're blaming the big banks for shorting it. But a lot of it really has to be that I think the information that a lot of people are counting on just is not true. So, you have to look a little deeper into it, especially if the person telling you it's so rare is the same person trying to sell it to you. So where do we go from here? I am now preparing my updated strategies for 2015. And I'll give you some of the general ideas here on the show. But I hope to have this completed in the next 3 or 4 weeks. So if you want a copy of it, give my office a call, 480-553-5282. Tell them you want the updated strategies. I hope to have that out before the first of the year. And I'm going to detail what changes are coming in this market. I think 2015, 2016, I think you're going to see some major changes in these markets. Every so often I change my strategy in the coin and bullion markets, and it's always hard to do because one day I'm recommending one thing, and then all of a sudden the next day I'm doing something completely different. So you can imagine, back in the 1990s when I decided to tell clients not to buy rare coins. Well, one day I was selling people rare coins, and the next day I'm not selling rare coins. And I don't know how you pick out which day that is. It's just at some point some point the evidence convinces me to change horses, and that's what I do. Now, a lot of guys won't do that because they don't want to take the flack. You know, if you sold somebody coins a month ago and now today you say don't buy coins, you're going to get people that are angry at you. They're going to call and say, well, why'd you tell me to buy them and today you're saying not to buy them? Well, you know, I don't have an answer to that. It's just that at some point, the evidence becomes overwhelming, and if you're being honest with your clients and being honest in your view of the market, you have to change with the market. So I went through this back in the 90s when I decided not to recommend rare coins. I mean, if I go back farther in the 1980s, I loved rare coins. Coins like the classic coins like gold and silver commemoratives, barber coins, seeded Liberty coins, a lot of the high-grade gold coins, $10 Indians and Liberties and MS 65, 66, 67. And they did great. But, you know, by 89 and 90, that market just crashed. And by the mid-90s, it became really evident to me that you were not going to see a rebound in those prices. And we've talked about that before, so I won't go into all the details. And that switch in strategy has served me very well. I would put up my average client's portfolio against anybody in the business, and I'd be shocked if anybody had a better track record than what my clients have done the last 15 to 20 years. Now, do I have clients in gold at $1,700? Sure I do. But I can tell you this, they're losing a lot less money, which isn't as exciting as saying they're making money. But gold's down 35, 36%. But a lot of the coins that the telemarketers are pushing, you know, the MS64 gold, the $2.50 Indians, a lot of those coins are down 70 to 80%. And that's before you figure in the 30 to 50% markup they had on them. So, you know, going from coins to bullion while the market was falling didn't especially make people a lot of money, but it preserved a lot more of their money. So if they wanted to be in this market, and that's something I don't have control over, but if they wanted to be in hard assets, they wanted to be in gold, silver, the metals, they still were much better off just being in gold and writing it down if that's what they wanted for insurance. So they lost money, but they didn't lose half as much as those who went into the coin market lost. One of the things that I've been looking at is what's going to happen from here on. And I'm looking at my crystal ball. It's still not telling me anything. But could we have a big rally in gold and silver? Yeah, I guess we could. But, you know, it's been 3 years. It's been 3 years since the market tumbled. We really haven't had any decisive move upward. I mean, we've had the normal, you get the normal gyrations. You get a couple of months where everything goes up and it looks good. And then it turns around and comes back down. It's trying to find its level. My gut feeling is that we're going to go into a lengthy time period of more of a flat market like what we saw in the 80s and really throughout the 90s, where, you know, gold traded from $250 to $500 an ounce, which I guess that's a pretty big spread, but nothing like $1,700, $1,800 that we saw in the last 5 years. So what's that going to do to the market? I think it's going to change. I think it's going to change the market momentum. I think it's going to change the way that people look at what they're going to buy. When I say people, I mean the people that are in this industry and the hard money. You're going to lose a lot of the people who got in. Well, we've already lost them. The people that were getting into gold just to make a quick dollar, those people were the first ones who got out when gold fell. And what you have now is you have us hardcore gold bugs who continually buy gold or believe in gold no matter what it does. And I think this is going to cause a lot of changes in both the coin market and the bullion market. And I think there's some things you can take a look at to maybe increase your position or maybe strengthen your positions, the better way to say that. So right after the break, I'll try and get into a little bit of that.
And here's Nick Grovich.
Nick Grovich back with you. You know, don't be shy about calling and asking me questions, even if it's not pertaining to what I'm talking about. Give me a call at 602-324-1510. It's always a lot easier for me if you call and ask me something or maybe share some information you have that I might want to know, because I guarantee if I want to know it, there's other listeners that would like to hear it. And if there's something you're thinking about and wondering about, there's probably other people wondering the same thing, but nobody's picking up the phone to call and ask me or challenge me. and I really do appreciate it when you call. So, if you have a question or you want to go a different direction, feel free to call. It's fine with me, and it makes my job a lot easier. But if I don't get calls, I'm going to keep going on the track I'm on right now. Part of what's making me change my strategy a little bit for next year is, there's a couple factors. I'm afraid that we might be in more of a sideways gold market like what we've had in the 80s and 90s. You'll have some moves both ways, but it's just feeling like we're not going to have these huge moves, maybe not in the next year or two anyway. And it's not that alone that is concerning me. What's concerning me is the type of phone calls and the type of people I'm meeting. It's really interesting. In the last couple of weeks, I've talked to more people that I did business with 20 years ago and 25 years ago, who are coming back to me. And let me explain that. I had one client in California that, and he relayed this story to me because honestly, I wouldn't have remembered it. I met him in the mid-90s, and he had a decent amount of money to invest. And at that point, as you know, I just wasn't very comfortable recommending the rare coins. So it was between me and another dealer, very well-known name, very well-known, well-respected name out in California. I don't want to mention his name, but a good dealer. I have nothing bad to say about this particular dealer. And this dealer talked this gentleman into buying rare coins. And at the same time, I told him that while I didn't see anything exciting happening in the market, I thought he was a lot safer to just buy, for his purposes, just buy some gold, stick it aside, and forget about it for a while. And he made the comment to me when I showed up at his house that, had he listened to me and just bought gold bullion, he would have made a couple $1 million. And instead, his coins are worth about half of what he paid back in 1995 from this very reputable dealer. And the reason I say I'm telling you this was a very reputable dealer. This wasn't somebody who just sold him a bunch of junk and sent him on his way with a bunch of overpriced coins. They sold him some really, really nice coins. One or two coins were spectacular. The rest were just, what we would consider in the 80s really nice, high-quality coins. So he didn't do so well. So now, after 20 years, he's sitting there, and this is the kind of calls I'm getting right now. They're saying, I had these coins, I held them for 15 or 20 years. The gold market went from $250 to as high as $1,900. Silver went from $5 to almost $50. And at no point during that time was I ever in a profit on my rare coins. So, there's a definition of, I don't want to say what it is, but doing the same thing and expecting a different result. And that's kind of where I'm going with this. He said, so what am I going to do? Am I going to sit on these coins again, hoping that the bullion market goes up, but this time when gold goes up, my rare coins go up along with the bullion? We've already sat through that market, and I know that gold can go to $2,000 an ounce, and it's not likely to affect my portfolio. So this client is, he's going backwards now. He's going back to what I told him 20 years ago. I don't know if he's going to make money or not. I think it's probably a nice conservative move. Of course, don't forget he's 20 years older than he was too. So instead of a gentleman in his 50s with a fairly decent time period, now he's in his 70s. So he might not have 20 years to sit around and wait. Another client I just visited yesterday, I flew out, I'm not going to say where, but I just flew out and visited him. He spent $1.2 million on coins. And while I haven't gotten it down to the penny, I think he'll be really, really lucky if we can get $500,000 out of it. So again, he talked to his tax accountant. He talked to this gentleman's got some money. He's got some real money coming in and could use the tax loss. So, at least he's going to get something out of the loss. He'll save some money in taxes on it. So that's a good thing for him. And that's something you need to look at too. If you're in a big loss, you can sell your coins and carry that loss forward. So if you're in the stock market, you have some big gains there. You can offset it and not pay the taxes. So, it's just a way you can do some little things to maybe keep some of the gains you made elsewhere in your pocket and clear up some problems you might have in the coin market. But, this gentleman also, At first, when I talked to him, I was under the impression he wanted to just get into rarer types of coins, which in his position, he's probably one of the few candidates that it might make sense for. But after, he's now in his late 70s also, and he said, Nick, what am I going to do? I'm going to buy a coin for $100,000 or $200,000, and it's going to sit in my trust. And he said, my trustee says, something happens to you, what am I going to do with the coins? If you have stocks or bonds or something like that, I can give those to your heirs. I know what they are. We can deal with it. But what am I going to do with a coin? He had one coin that he paid $97,000 for. He said, my trustee says, what am I going to do with that coin? How am I going to deal with it? I don't know what to do with it. You're just saddling me with a big headache. So he just wants to bail out, take his money, and go on with his life. And that's what I'm seeing more and more of. People are losing, when gold flattens out, everybody starts thinking, well, what's going to bail them out? As long as gold was going up, they're happy to believe the dealers and think, well, gee, gold's going to go up, silver's going to go up, eventually it's going to pull the price of my coins up and the market will bail me out. Well, when people start losing confidence that the market's going to bail them out, now they have two choices. They can either put it in something different. They can try and do the same thing that didn't work the first time and hope it works the second time, which that's the definition I'm after that I don't want to use. And or they can just get out and go on with their lives and do something else with the money. And I think you're going to see a lot more people just saying, we took a good try at it. Gold went up. My coins didn't go up. It's time to move on. And one of the reasons I'm mentioning this is one of the things I think is going to change this market. Really interestingly, yesterday I got an email from one of the biggest dealers in the country. They're also one of the biggest wholesalers. They make the market on a lot of the pre-1933 gold coins, so the 10 Liberties, the $20 Liberties, the St. Gaudens, all the different grades. This is one of the market makers, and I haven't had time to look at all the numbers on their chart, but what they were saying is just in the last year alone, they're saying, last time gold was at $1,200, the premiums on these coins, and the premium is the price above the gold value, was 2 and 3 times higher than what the premium is today. So to give you an example, a $5 Liberty in MS64 today, and I'm just going off the top of my head, so don't tell me I'm off by $15, but today an MS64 $5 Liberty is probably a $600 or $700 coin, and last time we were at $1,200, it was probably a $1,500 coin. So what a lot of dealers are saying is, the premium is so low, so you might want to buy these coins while the premium's low, and then when it goes back to the old premium, you make all this money. And on the face of it, that seems to make a lot of sense, except that if you look at these coins over the last 20 years, the premium has just steadily gone down. There's been a couple little bumps where it's gone back up, but the trend has been down. And the reason I don't think you're going to see those premiums go back up is because of what I was saying earlier. A lot of people who own these kind of coins, they're in the selling mood. They're not in the buying mood. And the only way that premium goes back up is if you get a lot more buyers that decide to buy them. Well, you get some people who want to bottom fish and say, oh, gee, the premiums are low, I might as well buy some. You might get a few, but they're not collectible coins. They're coins that are sold mostly by the telemarketers, by the big bullion houses, bullion/coin houses that have 50 or 100 guys sitting on the phone dialing for dollars. So as gold goes up, it's easy for those guys to sell coins, but when gold's flat like it has been the last 3 years, it's really hard for them to move the coins. And I can tell you, just in my own business, obviously, since I don't recommend those coins, I end up buying an awful lot of that material from clients. Now, I do get people that say, oh, you're telling us to sell them so you can buy them cheap. That's kind of ridiculous. That's like saying the guys who are selling them to you, they think they're going down, so they're unloading their coins to sell them to you because they think they're going down. It doesn't really make any sense. The people selling them, they're buying them, they're making a profit selling to you. I'm doing the same thing in reverse. I'm buying coins, I make a little percentage on them, and I dump them back in the market or to other collectors if I can. But it's interesting that one of my major buyers of this of the old U.S. gold coins, the pre-1933 gold coins, has completely stopped buying those coins from me. A couple of weeks ago, he called me and then also followed up with an email not to even send him St. Gaudens or 20 Liberties or $10 Indians, $5 Indians. Don't even send them to him because he can't buy them anymore. That's a pretty major development, and it just, to me, it just backs up what I'm saying, that you're going to get more and more of that stuff coming on the market, and there's just not enough people to buy it all. So the dealers are being forced into just inventorying it, hoping that the telemarketers can move it, and as their inventories grow, they have to lower prices. That's the only way they can stop the flood of coins coming into them. So it's not a real good sign for those coins. There are some areas I think are really worth looking at if you're the right person, if your portfolio is big enough and your risk tolerance is big enough. But there's a couple things we can look at after this break.
Once again, here's Nick Grovich.
Nick Grovich back with you again. I'm gonna talk about a little bit more about rare coins right now. And I hesitate a little bit because a lot of people take a few things I say and then run with it and end up buying the wrong rare coins. And then I'll hear from it next year saying, well, you told me to buy rare coins and I went out and did it and I'm losing money. So I'm a little hesitant to say it, but I think it needs to be said right now. Here's a good example of where I'm headed. I'm looking at the PCGS website. And at the Fun Show, that's the Florida show in January, one of the major shows of the year, there are some phenomenal auctions. I'm looking at one of the auction catalogs from Heritage Coins down in Dallas. Now, if you don't know coins, none of this is going to make any sense to you, and that means you probably shouldn't own coins. But if you know anything about coins, when I read some of these off, you're going to go, wow, I didn't even know those coins existed. Here's a 1915 Panama Pacific $50 gold piece in MS-67. Now, to those of you who don't know coins, that doesn't mean anything to you. To anybody who knows coins, that's a phenomenal coin. I was not aware that there even was an MS-67. There's a Lafayette dollar in MS-67. So what I'm getting at is there's some phenomenal coins coming up for sale here in January. And I have a phone call. Hi, this is Nick.
Hi, Nick. This is Rick.
Hey, Rick.
And I appreciate your show. And just what you said before the break about the bigger dealers and they don't want any coins, but especially those, not especially, but they're trying to get rid of them.
Right.
To me, that's much more telling than all the chartists and all the technology, all the technical, stuff. That seems more real. That seems more, I would use that as telling me what's really going on.
Yeah, no, you're right. You're absolutely right.
But I do have to say, because I know you talk about this because there's all the conspiracy and all the manipulation and all that.
Right.
But I think it is true that goes on because the Bundesbank, the German bank, they had to get out of the precious metal market because of some problems.
Right.
Did find out when they did in Europe especially, they looked into the LIBOR stuff,
right,
Forex, the currencies, and they also also saw that the precious metal markets are being manipulated. So we know that's going on.
Absolutely.
And to me, it seems like it's that you can't go by the fundamentals anymore. It's like you just can't. I think, and I was going to ask you, Dan Schaefer. I think you know Dan. He has a show on Saturday on KFNN. And he talks about deflation and gold going to 1,000 or 750. And other people say that too. Of course, there's the other people that say it's going to 4 or 5. But
right.
But it sounded like when you were saying it's going sideways that you might think that that's going on. And I think I used to be a gold guy and an inflation guy. Now I'm kind of changed, and I'm thinking, Dan's probably right. So is Bill Tatro, and so I'm thinking that unless there's a black swan event.
Right.
So, and I also want to hear if you have any more to say about next year. You were talking about possibly the things that you saw coming in next year. So I'm going to hang up and listen on the radio.
All right. Well, you're right when it comes to manipulation and the conspiracy theories, and I mean, there's no doubt that goes on. But I guess the point I'm trying to make is you can't blame that for everything. Sometimes markets just do what they're going to do, and as you said, when the real market is who's buying and who's selling, and the people who are making the market, do they have too much gold or not enough gold? That really does tell you what's going on. when I'm getting discounts for buying 20 or 50 coins on, they're going to discount it for selling me a bunch of coins. That tells me they have too much. When I call one of the major wholesalers in the country and say, hey, I'm going to sell you gold, and the first thing they do is say, hey, Nick, send it to us, but don't grimace at the prices, because some of these coins, I've got thousands of them sitting here, so I'm not anxious to buy another 100. I mean, the price is the price, and it's coming from what's really happening in the market. So we can talk about, like you said, the Bundesbank, and we can talk about LIBOR, and we can talk about what everybody's doing to manipulate it, and that does have an effect. But the fact of the matter is, when I'm talking about some of these coins, there's more coins than anybody knows what the heck to do with them. So, Rick, thanks for calling. I always like hearing from you. So here's where I'm going with the coins. I'm getting ready to make another big change in some of my recommendations, and what I want to say is this recommendation is not for everyone. It's probably for 5% of the people holding gold and coins. For most people, I think the first thing you need to do is take a real good look at what you have and get a review, whether it's from me or from your dealer or wherever you get your updates. If you want me to give you an update, call my office, 480-553-5282. I'll give you a real honest appraisal of what your coins are worth, what they've done the last 10, 15 years, and my opinion of what you might see, what you might want to hold on to or bail out of. That's the first thing I would do. But I look at the PCGS site, and PCGS, of course, has a vested interest in pushing rare coins. They want to support the dealers who are selling coins. They want to obviously support the market, because the more people buy coins, the more money PCGS makes. So on one side, they're talking about their exhibit at the Fun Show. That's the Florida show in January. And they've got an exhibit of Grovich dollars. Now, again, if you don't know coins, that doesn't mean anything to you. Grovich dollars are extremely rare coins. They're made from 1836 to 1839. I'm not sure exactly how many coins are in the set, because they have patterns, they have different coins. So it's either 11 or 12 coins or something like that in a set. So they have the finest known set. They're going to display it there. Now, if you are somebody who has millions of dollars invested, and you can afford to buy something like this, not that this set's for sale, but I'm just saying this is a set of extremely rare, extremely historically significant coins. You wanted to dump $1 million or $2 million in that, and that's not money you're counting on, to pay your mortgage in 2 years or pay something off. I'd say, you know what, go buy it. You will probably do very well on that, because those are exceptional, exceptional coins. Then, as I turn the page on PCGS's site, their next ad is, look at all the new special labels we have. We have a foil label for your gold eagle, and we have a black label, and we have a label with a picture of this guy on it. I mean, so the next page is how they're going to support the dealers by having all these different labels that dealers can market as being something special. So all of a sudden, they're telling us how to market a label and a piece of plastic, and it has absolutely nothing to do with the coin that's in the holder. So what is that all about? But that's what's been done to people over the last 15 years. Oh, you have to buy, even with NGC, and I think NGC does less to, well, it's hard to say what I'm trying to say, but I think they do less to promote the labels than PCGS does. But it's all marketing. I mean, NGC has different colored labels, different colored holders. You can get the retro holders, they're black. You get the new holders, they're white. You can get the brown label, the blue label, the flag label. And everybody tells you some reason why this label is better than that label. This label has the Hall of Fame on it. This label has a copy of Joe Blow's signature. I mean, in the heat of the moment, does that stuff matter? Yeah, a little bit. But when it comes down to it, it really doesn't make any difference. So what I'm getting at, and I'm running out of time here, is if you're in this market, I think you stick with, if you want to be in bullion, you stick with gold, platinum, and silver eagles. I would prefer that you buy the older dates. You don't want to pay much more for them. You might have to pay a couple % to get older dates, but that's where you have a chance to pick up some extra money. You're basically buying bullion that has the potential to become a collector's item, and I've talked about that before. Otherwise, if you want to still be in this market, I think the only chance you have in the coin market, there's some fantastic coins available. I mean, a lot of these coins I've never even seen before. I mean, in 35, 40 years, this is the first time I've seen a lot of these coins. So what's interesting is you've got more really fantastic coins coming to market this year and next year than I've seen in 30-some years. So the chance of buying something really spectacular that is significant and will probably make you money over the long run is really good right now. So if you're the right guy, I think you can get into some phenomenal coins, but don't just go out and spend money and say, oh, it's a $100,000 coin, I better buy it, because maybe you're paying $100,000 for a $50,000 coin. I'm running out of time, so that's it for today.